Good morning, everyone. Am I audible?
Yes, ma'am.
Right. So today is the refresher class on level 1. So all doubts what you have will clear them because next week is your mocks on level 1, right? So you want to go topic wise or do you want to go randomly?
Topic wise, ma'am.
Topic wise. Okay. So first topic that we covered in level 1 was your financial systems. Any questions or doubts from that? Yes or no?
Ma'am,
Yeah,
can you please explain cooperative bank once?
sure. So cooperative bank is, for example, let's say there is 34 of you in class today, right? So let's say all of you come together and form a bank. Then that becomes a cooperative bank. Okay. So what does this cooperative bank do? It will cater to your needs, meaning it will provide services to its members. Right? What services? Loans, savings account, checking account, whatever it is. And then they also might cater to non-members as well. The functioning will be same like a retail bank. Is this clear?
Any individual can make up this bank, ma'am.
Group of individuals usually.
Okay.
Okay. Right.
Ma'am, could you please explain the difference between retail banks and commercial banks?
So you know what a retail bank does? The services a retail bank provides? Yes or no?
Yes,
Yes,
ma'am.
ma'am.
So same services commercial bank also does. The difference is the clients they cater to. Right? If it's a retail bank, they'll cater to ordinary individuals like you and me. If it's a commercial bank, they cater to institutions and companies. Is this clear?
Okay, ma'am.
Okay. Right. Next question.
Ma'am,
Hmm.
please explain asset management in investment banks, ma'am. Merchant banks.
So basically, asset management is when investment banks get clients as institutions. Institutions meaning it can be governments, it can be another large corporate, etc. Right? So when they handle those clients' money and assets, that is called as asset management, meaning they would advise them where to invest, how much to invest, etc. Is this clear?
Yes, ma'am. What's the difference between brokers and dealers, ma'am?
So brokers are the ones, so to put it in example, let's say you're the client, okay? And you give me, let's say, 1 crore of rupees to invest on your behalf. So now I take that, I buy securities, sell securities in the market. Basically, I'm your broker, right? Yes or no?
Okay, ma'am.
Now, because of that, that service I provide you, I'll either charge you commission or I'll charge you a service fee, correct?
Ma'am.
So by that service fee or charge, that money that I get, I give it to my dealer. What he does, he takes that money, invests it in the market and makes more money for me, the company, correct?
Yes, ma'am.
Makes sense now?
Yes, ma'am.
Okay. Right, next question.
Ma'am,
Mhm.
can you please explain the clearing house, ma'am? I'm little confused.
Clearing house gets involved especially when you have or when you execute deals on the stock exchange, right?
Okay,
So
ma'am.
why are they required? Now for any investor who is executing deals on the stock exchange should keep something called as margins in the clearing house, right? So that's the role of the clearing house. They help or they keep the margin and they help to settle the deal. So once the deals are matched on the exchange, the exchange would inform the clearinghouse. On the day of settlement, what does the clearinghouse do? It will facilitate, or rather not facilitate, it will inform the depository to move the securities from the seller's account to the buyer's account. And then accordingly, it will move the money from the buyer's margin account to the seller's margin account.
Okay, ma'am. Thank
Ma'am, what is the difference between depositories and clearinghouse?
You don't store securities at the clearinghouse. You say clearinghouse doesn't have the authority to issue securities. Whereas your depository is a centralized location where all securities are stored either in physical form or demat form. They have the authority to issue securities. Is this clear?
Ma'am.
Ma'am, custodian.
Sorry,
Ma'am, custodian.
you're asking me to explain custodian, right?
Yeah.
Custodian.
What is the difference between custodian and means this clearing depository and custodian?
So a depository is considered as a custodian's custodian. So to put it in example, let me just give me a second. Let me just pull up an Excel sheet. Is the Excel sheet visible?
No, ma'am.
Yes, ma'am.
Okay. So put it in context. Let's say you're an investor, right? Do you want to directly deal in the market, or do you want an investment bank to be your advisor? Shivam.
Ma'am, as a retail investor or
Okay, let's say you're a retail investor. If you're a retail investor, you usually would put your order through a broker, correct? Yes or no?
yes, ma'am. Broker. Through broker.
So when you put your order to the broker, you would give the broker your money, correct?
Yes, ma'am.
Yeah. Now on your behalf, this broker would buy or sell securities, correct?
Yes, ma'am.
Yeah. Now, when he buys securities, the securities need to be stored at a custodian. Why? It's a regulation, meaning the regulator has said that any investor investing in the market should have a custodian. So whichever securities that is bought on your behalf is stored either in physical form or in demat form at the custodian. Are we clear till here?
Yes, ma'am.
Now, tomorrow you tell your broker, I want to sell some securities. Clear till here?
Yes, ma'am.
So once the broker makes a deal with another person to sell the securities, he will inform the custodian that from this client's account, remove these securities and deliver it to that other person. Are we clear till here?
Yes, ma'am.
That delivery can only happen through the depository. No other place. Now, does it make sense? What's a depository?
Yes, ma'am. Ma'am, depository plays a role of mediator in this case.
Not
And the-
mediator as such. He's the centralized location where the securities can only move. Otherwise, if this guy was not there, custodian can try directly transfer to the other custodian, right?
Custodian keeps the security and depository transfers the security to the custodian.
So ultimately, what would happen is this custodian would have an account at the depository where he would store the securities on behalf of the client. In case if the client wants to sell, then he will inform the depository from this account, transfer the shares to the buyer's account. Is this clear now?
Yes.
Okay. Rishita, hold on to that question when we go to fixed income class. Nandini, also fixed income class. Let's talk first about financial systems, right? Any other questions or doubts from financial systems?
Ma'am, why do IB have both buy side and sell side?
Because the clients that they cater to are your governments, HNIs, institutions that fall under the buy side. That's why
And
they
on
have
for
both
the sell
sides.
side?
Sell side is the investment bank and commercial banks, na?
Okay,
They sell
ma'am.
products and services to generate money for their day-to-day running of business.
Okay, ma'am.
Okay. Next question.
Ma'am,
Hmm.
the services provided by commercial banks are standardized, but the investment bank services are called as bespoke. What does that mean, ma'am?
Bespoke meaning it's specialized, like it caters to the customer's needs. Like to put it in example, if let's take example of your if you're buying clothes from a clothing store, there are standard sizes that they sell it in, right?
Yes, ma'am.
But if you go to a tailor, you can customize the clothes, right?
Okay, ma'am.
Okay, does it make sense now? What is bespoke services?
Yes, ma'am. Understood.
Right. Next question.
Ma'am, could you please explain direct financing and indirect financing?
So direct financing is simple. If you as a investor or who has money directly meets the borrower or the person who requires money in through the financial markets, that is called as direct financing, right? To put it in an example, let's say I have money, you require money, right? Now
Yes, ma'am.
you can directly approach me and ask me for the money which I would give to you. That will be a direct financing, correct?
Yes, ma'am.
The other indirect financing is I use an intermediary. So what would that mean is I don't know you, you don't know me, right? I would go, let's say, to an investment bank and say, here's my money, invest it. You would come to the investment bank saying that I need investors because I want to expand. Now, what they'll do is they'll connect us both. Is this clear? What is
Yes,
it, direct
ma'am.
and indirect?
Yeah, in this thing, if a corporation buys commercial paper issued by another corporation, that is a direct financing.
Yeah, that is an example of a direct financing.
Okay, ma'am.
Okay. Right. Next question under this thing.
Can you please explain over the code-driven market and order-driven market in detail? Actually, I got
I
both
mean,
the
we've explained it so many times. Why is it so confusing? Listen carefully.
yes.
I want to buy Reliance shares. If I want to buy Reliance shares, one is I can either go place my order on NSE or BSE, or if I know someone who has Reliance shares, I can buy directly from them. Are we clear till here?
Yes.
If I place my order on NSE or BSE, that is called as the order driven market. Okay. So now, yes, exchange is always order driven market. So now, let's say I want to hypothetically buy 100 Reliance shares at, let's say, 1,000 rupees each. So I go on to the NSE, I open up your Reliance order book. I place my order, which is a buy of 100 shares and at a price of 1,000. Now, like me, there are many buyers and sellers who put their order on the exchange, correct?
Yes, ma'am.
But do we know who they are? No, because nowhere it will display that, okay, XYZ placed this order. So the first feature of your order driven market is your counterparty is unknown. Meaning you don't know, if you're a buyer, you don't know who's the seller. If you're the seller, you don't know who's the buyer. Is this clear?
Yes, ma'am.
Now, like me, there are many people putting their buy orders and there are people who are putting their sell orders, and they are also putting in at what prices they want to buy and sell at, correct?
Yes, ma'am.
So although we don't know who are these people who are buying and selling, we do know at what prices people are buying and selling. Is this clear?
Yes, ma'am.
So the price is transparent. Now, the order execution or order matching is not guaranteed because exchange has to find as a match. And they work on matching the price first and they work on first in, first out. So there are chances that your order may not get executed or may not get matched. Is this clear?
Order execution is not guaranteed.
Yes, it's not guaranteed because exchange has to find as a match, right? Okay. However, if your order is matched, your settlement is guaranteed because we maintain margins at the clearing house. So the default risk is lower. So hypothetically, let's say if your order is matched, but on settlement date, let's say the seller defaults in giving the shares, then the clearing house will step in and do novation, where it will act as a buyer to a seller or seller to a buyer. Is this clear?
Yes, ma'am.
The other way I can buy the Reliance shares is in the code-driven market or OTC market. So what do? I maybe find 2-3 brokers and I ask them, I want to buy 100 Reliance shares. I'm only willing to pay a maximum of 1,000 rupees. So I know who I'm buying from, correct?
Yes, ma'am.
So in your code-driven market, your counterparty is known. However, the price is not transparent. The reason is, let's say I go to broker A, he says, I will not sell to you at 1,000, I'll sell at 1,100. Other one says I'll sell at 1,050. Other one says I'll sell at 1,025. So they are all quoting different prices, correct?
Yes, ma'am.
Yeah. Now this is we know that they want to sell to us at this price, but at what price they bought we don't know. Another thing is, sorry, just give me a second. Another thing is, we are not the only ones making the deal. There are many people in the market who are buying and selling because they know each other. They can negotiate on the prices, but we don't know what prices people are buying and selling at, right?
Yes, ma'am.
So your price is not transparent. Is this clear?
Yes, ma'am.
Okay. Now, your order matching is guaranteed because you know the counterparty. If one person doesn't agree for your price, he is not the only player in the market. There are other people in the market who you can buy or sell to, correct? So your order matching is guaranteed, but your settlement is not guaranteed. The reason being,
No exchange.
not exchange. The clearing house doesn't come into play in OTC market, right? We don't maintain margins at the clearing house. So the default risk is higher. Is this clear?
Yes, ma'am.
Right. Any other questions? From financial systems? Arey Vijendra, what is a merchant bank? It's an investment bank. We discussed what is an investment bank, right? You don't have to tell the history of how it was merchant bank and then it became investment bank. Is this clear? Vijendra, is this clear? Right. Next question. Any other questions on financial systems, or we can move on to cash equity?
No questions, ma'am.
Okay. The next topic was cash equity. So what are the questions or doubts from that?
Ma'am, in the criteria to go public, there is a point which says we need to show, in case of an FP, we need to show that 2 out of 3 years we have distributed profit. But will there be a scenario that after an IPO in the coming 3 years, they do an FPO as well so early?
No, usually they don't. It will take at least a good 10 to 15 years before they do an FPO.
Then how does that relate to 2 out of 3 years we have done a distributable profit we need to show?
So let's say that I did an IPO this year, which is 2022, right?
Okay.
Let's say 10 years from now, which is 2032, I'm going to do an FPO.
Okay.
So in the year 2031, 2032, and let's say 2030, out of those 3 years, I should have shown that I have distributable profits. Is this
Should
clear now?
be mandatorily the previous year from where we are doing an
It can't
IFP or
be,
any?
it can't be future, na?
No,
If
like you told 30, 31, 32, these are the mandatory lines, or in between 22 to 32, any 3 years.
It's usually the consecutive years.
Okay.
Okay, that is
Okay,
how
ma'am.
it's usually followed, because you should show the most recent distributable profits, right?
Okay,
There's
ma'am.
no point in telling them, okay, I started in 2022, I paid profits in or dividends in 2025, 2026. After that, you're not given anything. Would anyone first of all buy your shares, new shares, FPO shares? No, right?
And even if they say that they have tried to list at least 2 out of the 3 years, that means listing themselves on the stock exchange.
Yes, but maybe they didn't meet a certain criteria or certain this thing. That's why they could list.
Okay, ma'am. Thank you.
Ma'am, pricing method in IPO.
Just a second. Pricing method in IPO. So we have book building and we have something called as fixed price. Fixed price is simple enough.
Yes, ma'am.
Okay. So book building, what happens is you have bidders or people, investors who want to buy. So they'll submit in the quantity and the price at which they want to buy. So usually in the prospectus, if they're saying book building process, then usually they mention what is the cap price, meaning maximum you can pay per share as an investor, and what's the floor price, meaning the minimum you can pay them or you have to pay them per share. Are we clear till here?
Yes, ma'am.
So now your bidders would say this much quantity, this much price, or between the cap and floor price, whatever it is. So once all the bids are collected, right, then they'll start allocating. Now they can allocate, one is they can do discriminatory pricing and one they can do is uniform pricing, right? What would discriminatory pricing mean? Whatever price you bid at for the share, that's the price you have to pay. Is this clear?
Yes, ma'am.
Okay. If they say uniform price, then what do they do is, let's say hypothetically on this IPO, they collected 100 bids. Okay. Now
Yes, ma'am.
25% of 100 makes it 25 bids, correct?
Yes, ma'am.
So 25 bids in terms of the least quantity and least corresponding price, the price gets cut off. Why not the entire bid? Because if the auction is oversubscribed, that means the person who even bid at a lower quantity and lower corresponding price can still get the shares, right?
Yes, ma'am.
Okay. Once those 25 bids in this case are cut off, the price gets cut off, then the remaining is added an average. Okay. And that is the average price that everyone will have to pay. Now, In case if someone, let's say if the average price came up to $8, if someone bid at $10, now they don't have to pay $10, they have to pay only $8. Let's say if someone bid at, let's say hypothetically at $5, but now they have to pay $8. Is this clear?
Yes, ma'am.
Next question.
Ma'am,
Mhm.
the risk of trading ADR and GDR, they are asking what are the risk? Don't they get the default risk also if a company A goes default? Then shareholders will also face the risk.
They get the same advantage like a shareholder, right? So if the company goes bankrupt, that means if you're holding, let's say, an ADR of that company, then you will get, if you're lucky, you will get some money returned to you, right? Because like we discussed, the order of payments is once the assets are liquidated of the company, it's first to banks, always,
Yes, ma'am.
right? Then it will
Yes.
be to the bond holders, right?
Yes, ma'am.
Then it will be to the preference shareholders, right?
Yes, ma'am.
Then it will be your ordinary shareholders, and then it will be your depository receipts or whatever.
Yes, ma'am. But in quiz, it says only forex, foreign exchange risk is only there. That is why I asked this question, ma'am.
No, there is default. What are the other options?
Operational risk and all of the above is the option.
So exchange rate risk, what else? Exchange rate
Default
risk, default
default
risk.
risk,
Okay.
operational risk, all of the above.
So it is
They have
exchange rate risk is the most one, right? Because if you look at it, let's say if an Indian company wants to do an ADR, will the American securities regulator let them to do so if these guys don't have a good credit rating or are not an established company?
Yes, ma'am. They will check the credit rating.
They would check. No, it's as simple as saying that, okay, you want to borrow money from me, but if I'm not sure about your credit rating, will I let you borrow money from me?
No, ma'am.
Right? So same logic you apply. Let's say Indian company approaches the US depository, says I want to do depository receipt. But this Indian company is a relatively new company. It is junk rated. Now, would the securities regulator allow them to do a depository receipt in the US market?
No, ma'am. They won't allow.
Okay, is that clear?
Yes. Yes, ma'am. That priority is like forex risk only.
Yes, exchange rate risk is the primary risk for your deposit risk, primary risk.
Okay, ma'am.
Next question. Next question, guys, or no other
Please
question?
explain authorized capital now.
So, authorized capital is what the company is legally allowed to issue to the public in terms of shares. So, let's say if the authorized capital the company has set aside is hypothetically, let's say, this much. How much is this?
10 trillion. Billion.
10 billion, right?
Billion.
Now, the board of directors can decide to issue this entire 10 million as shares, or they can decide to issue only some of it as shares, correct? Or rather, I'll change this because it will be too complicated if I put it this way. Let's say, to keep it simple, they plan to, or they set aside an authorized capital of 1 million. Okay, are we clear till here? Yes or no? Yeah. Now they can issue this entire 1 million as, let's say, 1 million shares at a face value of, let's say, $1, or they can issue, let's say, 500,000 shares at a face value of $2. Is this clear? What does authorized capital?
Yes, ma'am.
Satya.
Yes, ma'am.
Okay. Next question.
Ma'am, could you please explain unsponsored ADR?
Unsponsored ADR is when, let me just pull up that Excel sheet. You know what's a sponsored ADR, correct?
Yes, ma'am.
Unsponsored is when the depository makes a decision to issue unsponsored ADR in order to stabilize the price of the sponsored ADR. Are we clear till here?
Yes, ma'am.
So what they do is they don't need the company's permission. They issue unsponsored ADR in the market, which will clearly mention that it is unsponsored. So if an investor invests in this unsponsored ADR, the only advantage he's going to get is capital appreciation. He's not going to get any ownership, dividends, etc. because the underlying company or the issuer didn't ask the depository to issue unsponsored ADR. They only asked to issue sponsored ADR, right?
Yes, ma'am.
Is this clear now?
Ma'am, does the unsponsored ADR makes the company's capital?
No. Logic, apply logic here. Did this guy take permission from this guy to issue the unsponsored ADR?
No.
No, he doesn't even know, or maybe sometimes he wouldn't even know that this guy is issued unsponsored ADR, right? Now the money that comes off from the guy who buys this unsponsored ADR, why will this fellow transfer it to this fellow? He won't, right?
Yes, ma'am.
Is this clear?
Yes, ma'am. Yes, ma'am.
Next question.
Ma'am, can you please explain the concept of 1 day ADR is equal to 10 shares and how rupees is converted into US dollars in case of depository receipt?
Exchange rate, Samadhi. So let's say hypothetically, let's say one ADR equals, let's say, we'll make it 20 shares of the underlying company, right? Let's say this company shares are listed in their domestic market. Which domestic market you want? You can change the domestic market if you want.
Indian domestic market itself.
Indian, okay. So let's say listed in India and the spot price, and you know what is spot price, right?
Yes, ma'am, the current market price.
Is currently, let's say, 1,000 rupees. Is this clear?
Yes, ma'am.
So that means your ADR, if you have to say it in rupees, would equate to how much? It will be 10,000, correct? No, sorry, not 20,000.
20,000.
20,000. Agreed?
It's 20 into 1,000. Is it 20,000?
Yeah,
Oh.
20 into 1,000.
Oh,
Correct.
yes.
Simple math,
ma'am.
right? Now find out what is 1 USD in terms of rupees today. Anyone?
$79.57.
79.57. Yeah,
Yes, ma'am.
I'll put it as 79 just for simplicity of calculation. Say 1 USD is 79 INR. That means your ADR in dollars would be how much? Sonali. If 1 USD equals 79 INR and
1000 divided by 79.
not 1000. Your ADR value is 20,000 INR, right?
Okay, 20,000 divided by 79.
Correct.
Okay, ma'am.
So 20,000 divided by 79. Okay, so around approximately $253.16. Is this clear now?
Okay, ma'am. Thank you.
No problem. Right. Next question.
Ma'am, sponsored ADR, please.
Sorry, what's so confusing with sponsored ADR, right? Company paid the depository to issue the ADR in the US market. Why? Because they want to raise capital in dollars.
Okay, ma'am.
Okay, what does the depository do? Contacts a local custodian where the company is based, tell them to collect the shares from the company. Once the
Okay.
shares are collected, they inform the depository. Then the depository would issue the depository receipts in the market. In this case, because it's US market, it's an ADR.
Okay, ma'am.
So when they sell this in the primary market, what money is collected is given to the issuer, correct?
Yes, ma'am.
Is this clear now?
Yes, ma'am.
Right, next question. Right, next question, guys. Any other questions from cash equity?
No, ma'am.
No, everyone's sorted on cash equity.
Yes, ma'am.
Okay. So the next question, next chapter was fixed income. So what questions from fixed income? So there were two questions, I think. One was securitization and inflation index bond. Okay. So inflation index bond is usually issued by government or government related bodies. So let's say a government issues an inflation index bond that has a par value of 1000, that's paying a coupon of 4% annually, and the maturity is for 5 years. And the time they issue the bond, the index is at 1000 points, inflation index. Is this clear till now?
Yes, ma'am.
Okay. Now, let's say that year one, ideally, when you receive the coupon, you're supposed to get 4% of 1000, correct? Yes or no?
Yes, ma'am.
Yeah. So ideally, you're supposed to get 4% of 1000. But since this is an inflation index bond, let's say the index went from 1000 points to 1200 points, which is a 20% rise, isn't it?
Yes, ma'am.
So now your par also goes up by 20%. So it becomes 1200. Are we clear till here?
Yes, ma'am.
Ma'am.
Now you get 4% on 1200, which is 48 as coupon instead of 4% on 1000. Is this clear to everyone?
Yes, ma'am.
Next year, the index went down by so many points, which was a 4.17 degrees. Is this clear?
Yes, ma'am.
So then this also goes down by 4. From here to here, it goes down by 4.17%. Now you get 4% on this as your coupon. Does it make sense now? What is an inflation index bond?
Yes, ma'am.
Yes, ma'am.
That happens all the way till maturity. On maturity, you get your coupon subsequent to whatever is this thing rise and fall in the index. And since it's the year of maturity, you get your 1000 returned to you. Is this clear? Is this clear? Yes or no?
Yes, ma'am.
Ma'am.
Okay. Securitization is the process of converting illiquid assets to tradable assets. So for example, your home loans, we covered this yesterday as well, right?
Yes, ma'am.
Yeah. So what do the banks do? They pool together all their mortgages, which are illiquid assets. And then what they do is they either sell it off to an SPV or SPE, or maybe the banks also might decide to just securitize them and form them into something called as your mortgage-backed securities. So what does this mean? It's type of a secured bond, right? Because it's tied back by your mortgage, which is the house, or rather the mortgage has the house as the underlier. Is this
Yes,
clear?
ma'am.
Okay. Do you want me to explain further, or this is enough, sufficient for you?
Ma'am, enough.
Okay. Right. Any other questions from fixed income?
Ma'am, what is the difference between collateral bonds and debentures?
Collateralized bonds and debentures, they're one and the same. So debentures are called as secured bonds. What does secured bonds mean? That it's tied back to an asset, right?
Yes, ma'am.
Collateralized bond meaning also it's tied back to an asset.
Okay, ma'am.
Okay.
Ma'am, also could you explain the market is bearish and bullish? What happens to the bond price and the market of bond?
So if market is bullish, that means price is increasing, right?
Yes, ma'am.
So then the market interest rate will decrease because it's an inverse proportional, right? Inversely proportional.
Yes, ma'am.
Yeah. So if the market is bearish, what does this mean? Is prices are decreasing, correct?
Yes, ma'am.
That means market interest rate will increase. Is this clear?
Yes, ma'am.
Because it's an inverse relationship between the two of them. Is this clear now? Yes or no?
Yes, ma'am.
Ma'am, when the interest rate increases, the bond prices, bond demand
Increases.
also increases. It is only inversely related to market price.
Yes, market price or the bond price, because the bond or the market interest rate has a direct effect on the bond price.
Okay, ma'am.
Okay.
Yes, ma'am.
Next question.
Ma'am, please can you explain the non-competitive bidding, ma'am?
So that is treasury bills. We'll hold on to that question. We'll complete fixed income first, right?
Okay, ma'am.
So any other questions from fixed income?
What's the difference between sovereign bonds and foreign currency?
Who's the issuer? In your sovereign bonds, it will always be government or government related bodies. Whereas in your foreign currency bonds, it's usually your companies or institutions. Both of them issue bonds in foreign markets to raise capital. Is this clear?
Yes, ma'am.
Next question. Next question. Other questions from bonds?
No questions, ma'am.
No, ma'am.
Right. Next is your money markets. So any questions from money markets? One was on treasury bills, right?
Yes, ma'am.
So that was what competitive bidding you wanted me to explain, or just the whole bidding process on treasury bills?
Non-competitive bidding, ma'am.
Okay. So non-competitive bidding would mean that you are a retail investor or you're an individual. That means if you want to buy the treasury bill, you can only submit the quantity of treasury bills you want to buy. Are we clear till here?
Yes, ma'am.
What price you will pay would depend on if the government is auctioning the treasury bills under uniform pricing or under discriminatory pricing, right? So
Yes.
if let's say the government says they're going to do for competitive bidders, it's going to be a discriminatory pricing. That means once all the treasury bills get allocated to the competitive bidders, whoever is the last person to receive the treasury bill, what price he bid at would become something called as the stop price. Are we clear till here?
Yes, ma'am.
That is the price that the non-competitive bidders would be. Clear till here?
Okay, ma'am.
If the government says that for the competitive bidders, I'm going to do uniform pricing, then like how we did in the IPO, they'll count the number of bids collected, then bottom 25% based on the least quantity and least corresponding price, the price gets cut off, the remaining gets added at average. Now that average price is what both the competitive and non-competitive bidders would be.
Mm, yes.
Is this clear?
Yes, ma'am.
Okay. Next question. Next question on money markets.
Ma'am, what's the role of financial regulator in interbank lending, ma'am?
So our financial regulator, for example, is RBI, correct? So he would publish something called as the interbank offer rate, which would be used as a benchmark rate when the banks are loaning money to other banks. So when banks are borrowing money from other banks, right? Other than that, your central banks would get involved in repo agreements, that is to control the cash flow in the market. Okay.
Yes, ma'am.
Next question. Any other questions on money market?
No, ma'am.
Okay, the next topic that we did was futures and forwards, right?
Yes, ma'am.
Okay. So from this topic, I've given you the set of questions anyway, right? Yes.
Yes, ma'am.
Yeah. So prepare accordingly, okay? So like I said, if let's say, for example, I ask you what is, or give me an example of a forward in a speculation. How would you answer this question? And remember, if you guys use any of the examples that I've given in class, I'll automatically mark you down. Is this clear?
Yes, ma'am.
Yes, ma'am.
Okay. So let's say if I ask you, give me an example of a forward in a speculation. How will you answer this question?
Ma'am, can I answer?
Yeah.
Yeah. In forward contract, I can do a forward contract with a cotton trader.
Mhm,
Suppose I am a cotton producer farmer,
mhm.
and this year I think the cotton prices will go high because of my good rainy conditions, and everything is good till now. But I am have a fear that if the heavy rainfall will occur in future, it will hamper my production level, or it will reduce the price of cotton. So I will do a forward contract with a cotton trader at for example at the uh, at rate of 6,000 per quintal,
Mhm.
and I will oblige him to buy at that price.
You can't oblige him, so that's the slight mistake you made.
Okay.
And maybe one more thing, one more sentence you can add is, let's say if the current spot price is 6,000 per quintal, my risk is in the future if it falls below 6,000 per quintal, right? So
Yes, ma'am.
then I would enter into a forward one. So that's a good answer. You gave an example, right? So, and the
Yes.
example was clear, just one slight mistake you made there, right? So
Okay.
that is a good answer. So that's an example of how you would answer this question. Is this clear to everyone?
Yes, ma'am.
Yeah.
Thank you.
If let's say you give me just the answer saying a forward is a contract where between buyer and seller where you agree to buy or sell the underlier at a future price at an agreed date, then you'll just get pass mark. Is this clear?
Yes, ma'am.
Okay. So in order to get a better scoring, I need to have a better answer. The better answer is always backed by an example and elaborated well. Is this clear?
Yes, ma'am.
Okay. Any questions or doubts from forwards and futures? Yes or no?
One basic difference between speculation and hedging.
Sorry, Shivam, your voice broke out a lot. I couldn't make out what you were saying.
Speculation and hedging.
Example.
Difference.
Difference, I've mentioned it in class so many times, right? Speculation is always done with the intention to make a profit.
Yes, ma'am.
You can be a buyer or you can be a seller and make a profit. So to put it in example, let's say I'm going to be a buyer. If I'm speculating that the market price is going to go up, I would agree to buy, or I would enter into a forward contract, lock in a price today to buy it at a future date, correct? So that would be a speculation. Na? My aim is to make a profit, correct? Yes or no?
Yes, ma'am.
Yeah. If let's say I am a seller and I want to make a profit, let's say if I'm holding, and this can even double up as an example of a hedging also to a certain extent, right? So let's say if I'm a seller and I'm thinking that the prices of something is going to fall down. So I would enter into a contract to sell it at a higher, like at the price today at a future date. So that even in the future date, if the price goes below, I can still sell it at that higher price, right? So that also
One
make
major
a,
intention, ma'am.
sorry?
One major difference is the intention of the buyer.
The intention, yes. Speculation is always done with the intention of making a profit. Whereas hedging is always done with the intention of minimizing your risk or reducing your loss. Okay?
Yes, thank you.
No problem. Next question.
Ma'am, I have doubts in a few numericals that I saw in the quiz.
Sorry, what was that? You have doubt in few what?
Ma'am, there were questions from the quiz, like the numericals. Can I ask them?
Can you email it to me?
Yes, ma'am, sure.
Right. Next question.
So only the buyer can enter into speculation contract, and in hedging only the
Satya.
seller.
No, Satya, you can be a seller as well, right? So let's say if I'm speculating the prices of maybe Tata shares is going to go down. Okay. Now I can, if I'm a speculator, I can enter into a futures contract on the exchange, a short futures, and opt for a cash settlement where I don't have to deliver the underlying, right? Yeah, and if my speculation turns right and the prices are falling on my futures contract, I can make profits, correct?
Yes, ma'am.
Yeah. Now if I'm a seller and I'm holding the, let's say, Tata shares, and I'm speculating that the price of the Tata shares is going to fall in the market, that is a risk for me as a seller, correct?
Yes, ma'am.
So I can enter into a forward contract where I say I'll sell it. Let's say today's price is hypothetically 100 rupees. So let's say I am agreeing to sell 50,000 shares at 100 rupees 1 week from now. So now 1 week from now, even if the price falls below 100, I can still sell at 100, right? Thereby reducing my risk.
Yes, ma'am.
Is this clear now?
Yes, ma'am.
Okay. Next question. Any other questions from forward switches?
Ma'am, I have emailed the questions to you.
I'll take a look at them and I'll answer you, okay?
Thank you, ma'am.
Right, so next was FX class. Any questions or doubts from FX class? Now, I've noticed in most of my mocks, whenever I ask a person, give me an example of an FX in a speculation or FX in a hedging or FX in an arbitrage, people you start giving examples of commodities as the underlier. The question is specific. It is FX. FX meaning what? Currencies, right?
Yes, ma'am.
Yeah. So I need an example of how you would speculate on currencies, hedge if the currency rate is fluctuating, and now you do an arbitrage trade. Is this clear?
Yes,
Yes, ma'am.
So in the mocks, the first thing that you do is listen to the question carefully. Okay.
Okay, ma'am.
Right. Any doubts or questions from FX? Yes, no, maybe.
Ma'am, can you please give a demo of the example how to project it in the mock, ma'am?
Meaning how to answer?
Yeah.
So
Yes, ma'am.
we did a demo a little earlier, no? When this one answered, Jay answered the question of give me an example of a forward in a speculation or hedging. That
Sorry, ma'am.
Jay gave an answer, no, earlier when I asked what is a forward or give me an example of a forward in a hedging, I said, right, Jay?
Yes, ma'am.
Yeah. Aren't
To
you
hedge
paying it,
the future risk.
Pavitra?
Okay, ma'am.
So, like I said, any question I ask you, if you just give me the definition and the definition has the key words and is correct, you will just get a 3 out of 5. Is this clear?
Yes, ma'am.
Ma'am, I have a question regarding previous one, that how forward and future done together to negate the defaults. I could not understand. Can you please explain?
1 second. Hold on to that question. Let me just finish this bit. Right.
Okay.
Now, Pavitra, if you gave me the definition and you elaborated with an example, and that example is, let's say, correct, and you articulated and structured it well, then you'll get more marks.
Okay,
Right?
ma'am.
Is this clear?
Yes, ma'am. Thank you.
Okay. Sorry, what was that question, Lina?
Ma'am, in futures and forward market, there one can enter into futures and forward to negate the forward futures default. How it is done?
Negate
And how
the
the
forwards default, not the futures default, because in futures you will not have a default, right? It's
Yes, ma'am.
executed on the exchange, na?
Yes, ma'am.
Okay, you can use the same example in class, but instead of saying oil barrels, change the commodity, no? Remember we
Ma'am,
did
can
that
you
example. So let's say if I'm selling oil, I enter into a forward contract. You know what is a forward contract, right?
Yes, ma'am.
So let's say I enter into forward contract to sell 1,000 barrels of oil on spot price on 30th September. What does this mean? Whatever is the price of barrel of oil on 30th of September, I'll sell it at that price. Is it clear?
Yes, ma'am.
Okay. Let's say today's price per barrel is $52 per barrel. So my risk as a seller is on the 30th of September if the price is less than 52. Is this clear?
Yes, ma'am.
Okay. Now, in order to negate this risk, right, I would go on the commodities exchange and enter into a futures contract where we would opt for cash settlement. That would mean at the end of the contract, I wouldn't have to deliver any barrels of oil, correct?
Yes, ma'am.
So let's say I entered into a futures contract to sell 1,000 barrels of oil at $52. Are we clear till here?
Yes, ma'am.
Now, as of 30th of September, we took various spot prices to see what happens. So my risk was if on 30th of September, the price is less than 52. Correct?
Yes, ma'am.
So on my forward contract now, when the price was 42, I make a total of what? 42 into 1,000, which is 42,000, correct?
Yes, ma'am.
On my futures, I've agreed to sell at 52. The spot price is 42. As a seller, I'm making a profit or a loss?
Profit.
Profit, correct. Profit of what? 10 per barrel. 10 into
10,000.
1,000 is 10,000. Are we clear with how the calculation has come?
Yes, ma'am.
Yes,
I
ma'am.
understood, ma'am.
Now, regardless if the spot price going up or down, because I've entered into this futures contract, I've sort of negated my risk, right?
Okay. Yes, ma'am. I understood now.
Understood now. Now,
Yes,
in
ma'am.
mock, if this question is asked, please don't say barrels of oil. Change the commodity, right? Make it something
Okay.
else.
Okay, ma'am.
Right. Any other questions from futures and forwards?
Ma'am, I have little doubt.
Mhm.
On 30th September, for the spot price of 50,
Mm.
the future will be minus 2,000.
No, you're future you're selling at 52. If the spot price is 50 on your forward contract, you have made 50,000. But on your futures contract, you're selling higher than the spot price, na?
Right.
So you make $2 na per barrel.
Yes, ma'am.
Right? When it went above 52, then you're making a loss. Because now the spot price is greater than your futures price, na?
Got it, ma'am. Got it.
Okay. Right. Next question.
Ma'am, how will we present numerical examples in the mock? For example, foreign exchange in arbitrage.
You can write it on a piece of paper, right? Not in advance, right? You can use a paper and pen to explain if you want, or maybe you can even share the screen and show it to me on an Excel sheet.
Oh, okay, ma'am.
Okay.
Hmm.
Right. Yes, Satya, one can enter into both a forward and futures contract. There's no restriction that, okay, if you entered forward contract, you cannot do futures contract. Is this clear?
No.
Right. Any other questions from futures and forwards? And FX? We were in FX with that, but yeah. Sorry, any other questions from futures forwards before we move on to FX?
No, ma'am.
Okay. So as I was saying, in the mocks I've noticed whenever I ask example if FX in a speculation or hedging or arbitrage, you guys start giving examples of forward contracts with underliers with what do you say, underlies such as commodities. So listen to the question carefully. I'm asking about currencies, right?
Yes, ma'am.
Okay. Right. So any questions from FX class?
Ma'am, can you please explain about the base currency? Who is the holder and what need to do? I'm little confused about that.
So, okay. 1 second. Okay. So what you always need to remember is whenever you see a quotation, give me two currencies, a currency pair.
Ma'am, USD and INR.
Yeah, change it. No, so boring. Same currency. So many currencies I taught you, and you're still saying USD, INR.
INR versus ruble.
Ruble versus INR, or INR
Yes.
versus ruble.
INR versus ruble.
Both are NDF currencies. Are you sure you want to do this?
Okay, then no, ma'am.
No, what else? Come on.
Ma'am, while trading, should we not do with NDF currencies only?
We cannot trade on NDF currencies, right? That's why we have NDF contracts, no?
Okay, okay, ma'am. Actually, when I was doing this currency exchange, I did for INR and rubles.
That
I
is
was confused.
different. That is different, Nonalina. That is your need-based trading, no?
Oh, yes, ma'am.
That's a need-based trading. If it was on a global scale where you're FX trading, your speculators, your market makers, they're not allowed to exchange your NDF currencies freely, no? So they can enter into NDF contracts. Otherwise, they usually would do a major pair or minor pair or major pair, or maybe major versus exotic or minor versus exotic currencies.
Okay, ma'am.
Right.
Ma'am,
So
what about in swaps? In swaps also, we should not use NDF currencies?
in swaps, you would never use NDF currencies. It is usually on major versus minor, or like I said, major versus major. Because in your FX swaps, we clearly mentioned what it's a combination of two FX trades with the same trade date and different settlement date, correct?
Yes, ma'am.
But an NDF contract is what? It's a combination of two trades at different trade dates and same settlement dates, correct?
Yes, ma'am.
Okay. Still waiting for the currency pair.
Ma'am, I'm not getting anything right now.
Well, give me a major and a minor one, no? Or a major versus major.
Euro versus JPY.
Okay. Which is also called as a yuppie, by the way, the nickname, right? So let's say Euro versus JPY is hypothetically, do you want to pull out an actual rate and give me, just look at it. How much is 1 euro in JPY?
Ma'am, wait, I'll.
By the way, what is the biggest news today? What is the news today? That is in
Ma'am,
Feb.
Elizabeth.
Yes, the longest reigning monarch finally ended
Yes.
her reign.
Yes, ma'am. After 96
140.
years.
96 years, yes, at 96 years old. She reigned for 70 years, longest in history, I think, so far.
Ma'am, the exchange rate is €1 is equals to 143.77 JPY.
Okay, I'll take it as a round off number just for the simplicity of explaining. Okay. So let's say what you always need to remember, the currency on the left of the slash is called as the base currency. The currency on the right is called as quote currency. The rate on the left is called as bid and the rate on the right is called as ask. Are we clear till here?
Yes, ma'am.
Yes, ma'am.
This quotation is always from the market maker's point of view. Market maker is the guy who gives you the bid and the ask price, correct?
Yes, ma'am.
So if the market maker wants to buy 1 EUR, he is willing to pay you 143 JPY. Is this clear?
Yes, ma'am.
If the market maker has to sell 1 EUR to you, he is going to take 145 JPY from you. Is this clear till here?
Yes, ma'am.
Okay. Now, let's say you're the class, meaning the person who wants to exchange the currency with the market maker. Now, are you holding euros or are you holding JPY?
Euros.
Okay, let's say you're holding euros. How much euros are you holding? Give me a hypothetical number.
1 million.
Okay, so let's say you're holding 1 million euro. Now, the simplest way to understand what rate to take is understand what the market maker is going to do on the base currency. What is our base currency? Euro here, correct?
Euro.
Yeah.
Yes, ma'am.
Now, you are holding euros. That means the market maker is going to be selling the euros to you or buying the euros from you.
He's buying.
Correct. So if he's going to buy, what rate he's going to use? He is going to use the bid rate. So what is the bid rate? 143 JPY, correct?
Yes, ma'am.
Nalina, is this clear now?
Yes, ma'am.
So you have 1 million euros. How much JPY will it become? Let's cross multiply. Yeah. So that's going to be 1 million into 143. Is this clear?
Yes, ma'am.
Okay. Now, let's say you spend some JPY from this. How much JPY do you want to spend from this? You have 143 million JPY. So let's say you spend some JPY from this. How much is left over? Like how much you want to spend?
Ma'am, 50 million
50
JPY.
million. Okay. So you have spent, let's say, 50 million JPY. Okay. So you're left over with how much now? This minus this. Yeah. Something went wrong. Oh, sorry. Yeah. I know what went wrong.
Ma'am, it got added, I think.
Yeah. No, because
There was a minus sign.
yeah, exactly. Right? Is this clear?
Yes, ma'am.
Now, Nalina, you're holding JPY, which is the quote currency, correct?
Yes, ma'am.
Now understand again, what is the market maker doing on the base currency? Is he selling the base currency or buying the base currency from you?
Now JPY is my base currency.
No,
Right.
don't look at your perspective. Look at the market maker's perspective. You are
Okay.
holding the quote currency. That doesn't change. JPY is the quote currency still.
Oh, okay, ma'am.
But understand, what is the market maker now going to do on the base currency? Is he buying the base currency from you or selling the base currency to you?
He is selling base currency now.
Correct. So if he's going to sell the base currency, what's the rate he's going to use? He's going to use this rate, correct?
Yes, ma'am.
So you have 93 million JPY. How much euros are you going to get? Let's cross multiply again, right? And it's basically
ma'am.
to find X. So it's going to
Division.
be division now. It's going to be this divided by 145. Is this clear now?
Yes, ma'am.
Okay. So always understand what the market maker is doing on the base currency. Will he be selling the base currency to you or buying the base currency from you? If he's going to sell the base currency to you, he's going to use the ask rate, which is on the right of the slash. If he's going to be buying the base currency from you, he'll use the bid rate, which is on the left of the slash. Is this doubt sorted now?
Yes, ma'am. What if JPY is my base currency? First, he will sell.
Again, Nalina, you are the class. For you, it doesn't matter base or quote. It matters only for the market maker, because you cannot negotiate with the market maker. If you start thinking that way, you'll get more confused. The easiest
ma'am.
way to understand, like I said, is understand what the market maker is doing on the base currency, right? And again, to
Okay.
repeat it, if he's selling the base currency to you, he'll use the ask rate. If he's buying the base currency from you, he's going to use the bid rate.
Okay, ma'am.
Okay.
Okay, ma'am. Understood now.
Because if you start looking, okay, he is selling euro, that means I am buying euro, I have to use this rate. It's going to get confusing that way.
Yes, ma'am. I was confused in that way only.
That's why, right? So this
Okay,
is the
ma'am.
most simplest way to remember what rate to use.
Okay, ma'am.
Okay. Right. Next question. Next question, no doubt. Come on. Or do you guys want to go for a break and come back?
Ma'am, how do we answer for trade economics questions? Like we can put up our imaginary numbers?
Yeah, you can put imaginary numbers. Like, let's say if I ask you for trade economics for
FX.
yeah, so if I say trade economics for FX, you can say let's say hypothetically I'm speculating that GBP will appreciate against USD. Then, and let's say the current rate today is hypothetically 1 GBP equals, let's say, 45. Then if I enter the contract today, my today's date will be called as trade date, right? My settlement date would be 1 week from now, right?
Okay, ma'am.
And then my currency 1 and currency 2 will be GBP and USD respectively. Then I have notional 1 and notional 2 will be, notional 1 will be amount of GBP and notional 2 will be amount of USD, right? And then the exchange rate. So since today's rate is, let's say, 45, and I'm speculating it will go up to 48. So I would maybe do a buy at a rate of 40. So my exchange rate on the contract will be 40. And then the counterparty that I'm dealing with.
Okay, ma'am.
Yeah. You don't have to give me, but one thing, guys, whenever you give a quotation, sorry, just give me a second. Whenever you're giving me a quotation of an exchange rate or a price of a security or anything like that, please insert the word hypothetically, because let's say you're saying, okay, the GBP USD rate is 45 today. The interviewer might ask you, show me where it is 45, right? Are you getting what I'm trying to say?
Yes,
Yes,
ma'am.
ma'am.
Yeah.
Yes.
So always mention, let's say the hypothetically the rate is today is this much, and hypothetically let's say the rate in the future will go this much, right? Don't make a statement is what I'm trying to say, right? Because the moment you say that, they might say, okay, show me where it is 45 or show me where it is this thing. So if you're saying, let's say Reliance share is 100 rupees, they'll ask you, okay, show me where it is 100 rupees today. Yeah.
Yes, ma'am.
Okay. Right. What else? Right. Any other questions from FX?
No, ma'am. Ma'am, what are warrants, charts, and overlays?
Warrants will cover in your this thing. Charts and overlays I'll have to look up. I'm hearing it for the first time as well. Can you type it in the chat?
Yes, ma'am. Other than that, have we covered indicators?
What indicators?
I don't know. I just the word was there in the. I think in one of the quizzes it was there. The word indicators. I could not make out that from which topic was the word from.
What was the full question? You remember?
Ma'am, I don't. There might be, I think, market indicators.
Might
I
be
think.
market indicators. Yeah.
What are market indicators?
Market indicators would be your Acha, so chart and indicators basically just talks about your price fall going up and down. It's denoted in charts, like your pie graph or line graph or something like that. Stock
Okay,
charts.
ma'am. Okay, ma'am.
Okay, indicators would be prices going, like the stock price can be an indicator, right?
Okay, ma'am.
There you go. Do we, so Satya, I think you need to rephrase the question, not do we want to study currency names and their nicknames? No, you have to. Is that clear? Yeah. Right. So any other questions from FX?
No, ma'am.
No?
No, ma'am.
Okay. Shall we take a quick break here and come back?
Yes,
Yes,
ma'am.
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 Okay. So come back at 55. Hello, sorry guys, I had a emergency call I had to attend to. Right, where did we stop at? We stopped at FX, right?
Yes, ma'am.
Okay, so the next class that we did was options. What are the questions and doubts on options? No questions, no doubts, or have to think.
Ma'am, when there is short call and short put, do we need to talk in the terms of writer?
Yes, because that's the writer's point of view, right?
Okay, ma'am.
Okay, so let's say if I ask you what is a short call, right? You can start by giving the definition, right? And then you can put it in example saying that, like, let's say if this question was asked, you would start by saying a short call is a derivative instrument where it is an agreement between the holder and writer of an option, where in this case it's a short call, so it's from the writer's point of view, where he's obligated to sell the underlier at strike with the payment or with the receiving of premiums from the holder, right? Then you can say a short call option is usually done by a writer if his view is that the market might go bearish. So for example, let's say if I entered into a short call option at a strike of 150 and premium is 20. Now, if the spot price of the underlier is less than the strike price, then I would become in the money because the holder will expire the option and buy from the market and he'll pay me a premium of 20. Now, in case if my speculation goes wrong and the underlier's prices rise, then let's say if example, if the spot price of the underlier is 180, now the holder will exercise the option contract where I'll be forced to sell at 150, which is less than the market price. So in this example, I would make a loss of 30, but I get paid a premium of 20. So my overall loss would be minus 10. That would be my out of the money situation. My break even point at the money would be for a call option, it would be strike plus premium. So if my strike is 150 and my premium is 20, my break even point would have been at 170. Is this clear?
Yes, ma'am.
So you give me an answer like this, you'll get good marks, right?
Okay, ma'am.
Yes, ma'am.
So what other questions or doubts from options?
Ma'am, the only unlimited profit is in long call, right? Other things it is limited only.
Yes, because it's from the holder's perspective, na?
Yes, ma'am.
Right.
Ma'am, there was
Any
a
other-
question. Yes, ma'am.
Yeah, go
Ma'am,
ahead.
there was a question yesterday. It was like, what can be the maximum profit in case of long put, I guess.
Maximum profit in case of long put.
Yes, ma'am. Because there was a value of strike price was, I think, 77
Limited.
and
Limited, no? In a long put, his profit is limited, correct?
so it will be basically strike minus the premium. Like premium is 1%, so it will be 76 will be the answer.
What was the entire question?
Ma'am, the question was like this: the strike price was 77, and
Strike is 77. Okay.
and 6 is the premium. What is the maximum profit in long put, and what is the maximum loss?
Yes, ma'am, this was the question.
He loss would only be the premium. Okay, because if the market price goes above the strike price, above 77, then he would expire the option contract and sell in the market, correct?
Yes, ma'am.
Okay, his loss also here would be in terms of premium, it will be limited, because if let's say if the spot price is 75, then he would exercise, he'd make a profit of 2, but he pays a premium, so that will make it 4 is overall this thing, right? So let's look at it. So strike is 77. He's paying a premium, so that will be 6, right? And let's say this spot is 75, right? So he makes a profit of 2 in this case, pays a premium, so his loss is -4 here, right? So maximum, what if the spot goes to 177, he makes a profit of 76, right? So -6, 70 would say is his maximum profit in this case.
But in option it was 71, ma'am.
71, huh?
Yes, ma'am.
That would then indicate his
Spot price is 0.
yeah, spot price would be 0 in that
Okay.
case. But technically, logically, it can't go to 0, right?
Yes, ma'am. Hypothetically, it can.
Hypothetically, yes, but logically, it won't.
Yes, ma'am.
Okay, does that answer the question?
Yes, ma'am.
Okay, what's the next question? I'm also getting a nice revision.
Ma'am, in this long put also, the
Sorry, your voice
loss is
breaking.
also limited.
Loss is limited. Yes. No, yeah, loss is limited to the premium amount.
Yes, ma'am.
Yeah, because he'll only make a loss of premium, nothing more than that.
Okay.
Okay. Next question. Any other questions from options? Yes or no?
No, ma'am.
No, ma'am.
No? Okay. I think next we did was swaps, right? So I was going to tell you how to answer your swaps question, right? So questions that can come on swaps is what is interest rate swap, what is FX swap, what is currency swap, what is equity swap, and what is CDS. Yeah?
Yes, ma'am.
Yeah?
Yes, ma'am.
So if the question is what is interest rate swap, you can start off by saying what is the definition of an interest rate swap, which is it's a derivative contract where you exchange future cash flows based on the underlying interest rates. And then you can say interest rates is of 2 types, which is your fixed and floating, right? And then you could say your interest rate swap is primarily used to reduce your borrowing cost or hedge from the interest rate fluctuating in the market. And then you can say, for example, you don't have to give that lengthy example of this investment bank wala scenario, right? You don't have to say wants floating, goes to investment bank says don't go for floating, go for fixed. Unnecessarily it will complicate, and then you would maybe not even be able to keep track of the answer, right?
Yes, ma'am.
Yeah.
Yes, ma'am.
So keep it simple. So let's say if I was a company that's borrowed, let's say $10 million from my bank at a floating interest rate of, let's say, SOFR plus 2%. My risk is if the fixed interest rate stays below the floating rate. So in order to reduce my risk, I would go to a swaps bank and enter into an interest rate swap agreement. where from the swaps bank, I would maybe receive how much? In case if I borrowed, let's say SOFR plus 2%, then in the interest rate swap agreement, how much would I receive? Let's see if you can figure it out.
Could you please repeat the question once?
Let's say if I borrowed from my bank at a SOFR plus 2%, okay? Are we clear till here?
Yes, ma'am.
In the interest rate swap agreement with the swaps bank, how much will I receive? Apply a little bit of logic, folks. Common sense is required here.
Rate only.
No.
Fixed of 2%.
Nahi, not fixed. Remember, if you're borrowing at floating, you will receive the floating only, right?
Yes, ma'am.
I'm sorry to interrupt. My connection was lost. Can you please repeat the question?
My question was, let's say if you borrowed $10 million from your bank at a SOFR plus 2%, and if you want to reduce your risk, you enter into an interest rate swap agreement with the swaps bank. Then in the interest rate swap agreement, how much will you receive?
Okay.
Ma'am, the fixed interest, what we
No, your
have to
swap
agree.
won't work. Again, Nalina, I remember what I said. If you're borrowed at floating from your bank, you will receive a floating in the interest rate swap agreement to work. Otherwise, it won't work.
Oh.
Guys, little bit of logic, come on.
Ma'am, 2%.
2% is fixed again, no, Rishita. Remember, I just said he's not going to receive fixed. He will pay a fixed, but he won't receive a fixed.
SOFR plus, ma'am, what was the rate?
He borrowed at SOFR plus 2%.
SOFR plus 1%.
Yes. SOFR plus 1%, and he'll pay a fixed to the swaps bank in order to reduce his borrowing cost in case if this fixed stays below the floating. Is this clear?
Can you please repeat it once?
I, as a company, borrowed $10 million from my bank at SOFR plus 2%. In order to reduce my risk, I enter into an interest rate swap agreement with the swaps bank where I would receive probably SOFR plus 1% from the swaps bank and I'd pay him a fixed. Is this clear?
Yes, ma'am.
Yes, ma'am.
Okay, right? And then you could say thereby reducing my risk in case if the fixed stays below the floating. So this is an example of an vanilla interest rate swap where it is an fixed versus floating or a floating versus fixed. We also have something called as basis interest rate swap, which is floating versus floating. Is this clear?
Yes,
Yes,
ma'am.
ma'am.
Yes,
Yeah.
ma'am.
So technically, you don't have to give me all of these numbers or scenarios, right? A simple answer, but it has put across the concept and the points, correct?
Okay.
Yes, ma'am, understood.
Okay. So Satya's question is option contract in OTC market, the exercise styles are European, Bermudan, American. Yes. And in exchange, the exercise or they get to exercise every Thursday, or they can choose on every Thursday if they want to exercise or not. Okay. Right. Are we clear on how to answer swaps questions?
Yes, ma'am.
Okay.
Yes, ma'am.
When it comes to equity swap also, you don't have to give me numbers and all of that. The concepts, if you mention, is enough. Is this clear?
Yes, ma'am.
Okay. CDS also, you can explain the definition and then give an example, right?
Yes, ma'am.
Okay. So what I wanted to show you is the scoring template of how it will be for your mocks. Is the Excel sheet visible?
Yes, ma'am.
Okay. So as you can see, every question from every topic is asked, right? Minimum of one question from every topic is there. Is this clear?
Yes, ma'am.
Okay. Each question you will be scored out of 5. 5 being the highest, 3 is the minimum to pass in that question. Is that clear? And I already told you guys, to get a 3, at least give me the definition, and the definition needs to be correct, meaning it should have the correct terminologies and the concept has to be correct and it has to be articulated and structured correctly. Is this clear?
Yes, ma'am.
Okay. Yes, ma'am. If you want a 3, that is on the safe side. If you want better marks, you need to back up your explanation with examples that are elaborated correctly and that have proper structure and articulation. Is this clear?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am. Okay. And I will be giving each of you an individual feedback as well once we finish the mock, right? So that is to help you guys to understand how to prepare for your next mocks. Okay. Now, most of the time I've noticed this, some people get scared to attend the mocks. Don't get scared. The reason is, one thing is, your mocks has a weightage, right? Both your level 1, level 2 and your final mocks have a weightage for your placements. Agreed?
Yes, ma'am.
Yeah.
Yes, ma'am.
So even though, let's say, you get the less than 3 in your level 1 mocks, you can still score better in your level 2 and level 3 mocks, correct? Which have a higher weightage than your level 1.
Yes, ma'am.
Also, in your level 1, you will get the feedback on how to improve your answers. Yeah.
Yes, ma'am.
Yeah. Okay. And I'm going to tell now, and I'll also mention it in the email. If anyone, under whatever circumstances, miss or are absent for your level 1 and level 2 mocks, there will absolutely be no rescheduling of these mocks. Is this clear?
Yes, ma'am. Yes, ma'am.
Yes,
Okay.
ma'am.
Now your final mocks, which is called as L3 mocks, which is your final mocks, which will be questions on all of the topic. And don't worry, during your final mocks, I will show you the template for your final mocks as well. If in case you are absent for your final mocks, then we will reschedule it. Is this clear?
Yes, ma'am. Yes.
Only the
ma'am.
final mocks.
Yes, ma'am.
In case in your
चाचू
final mock,
सुनो ये दादा को दे के आओ.
acha, over, huh?
Sorry,
Now,
I'm sorry.
that's okay. Right. In case in your level 3 mocks, if some of you do not get 3, get less than 3, that means you are not eligible for the placements. Even if your grade book says that you're tiered 3. I'm going to repeat it. In case in your level 3 mocks, if you score less than 3, but your grade book says you've got T3 and above, above will be difficult, T3. You still won't be eligible for placements, but however, we will do a re-mock in order to improve the score. Is this clear to everyone?
Yes, ma'am.
Yes, ma'am.
Yeah, and that re-mock is only one more chance. So when I tell you guys I'll be doing a re-mock and I give you a schedule and a time for the re-mock, which will usually be 2 weeks after your final mocks. If you still think you're not prepared at that moment, let me know, because I don't want you to come give the re-mock and again perform badly. Is this clear?
Yes, ma'am.
Okay, so to get a 3, it's possible for anyone, because it's just giving me the definitions. The definitions have to be correct with the proper terminology that anyone can do. Even if people think that, okay, my English is not good, it's just ratifying the definitions, right?
Yes, ma'am.
Yeah. Is this clear to everyone?
Yes, ma'am.
Yes, ma'am.
Okay. And make sure that you guys complete your required gradebook parameters on time, like your elevator pitch submission, your two speech pitch submission, everything. Is this clear?
Yes, ma'am.
Okay. Yes, ma'am. So you guys see, the goal is in your level 1 mocks, your goal is to get a pass mark at least, which is a 3 out of 5. Yeah.
Yes, ma'am.
Your level 2, level 3 then should be improving on your previous mock scores in order to improve your tiering. Is this clear to everyone?
Yes, ma'am.
Yes,
Yes,
ma'am.
ma'am.
Okay. Right. And as I said before, you guys need to at least spend a minimum of half an hour to 1 hour every day revising. Tanu, it's next week, 13th and 14th is the level 1 mocks. I'll be publishing the times and schedule today and the slots. Okay.
Yes, ma'am.
Right. So those of you who haven't taken it seriously are just thinking, okay, I'll study last moment. Good luck to you, because we have covered almost what, 9 topics, right?
Yes, ma'am.
9 topics in the end moment. If you're going to try to mug, read, and this thing, it's not going to help you. On the plus side, you still have your level 2, level 3 mocks. If you guys have not started revising, I would start suggesting that you guys start revising. And if you are going to tell me in mocks, if I hear stupid excuses saying that, oh, I work night shift, I do this, I do that, I don't care. If you want placements, you know what is the criteria, correct?
Yes, ma'am.
Yeah. And even if you're working night shift, day shift, whatever it is, I think anyone can spare at least half an hour in a day to revise. Yeah.
Yes, ma'am.
Instead of spending
Yes,
it
ma'am.
on your phones or playing games or chatting for the next 3 months, if you have to stay like a hermit, no, do that. If you have to cut off contact from the outside world, also do that. Is this clear?
Yes,
Yes, ma'am.
Okay, that's the seriousness in which I'm telling you guys, because then don't come back to us saying, oh, we got lesson mocks, this and that, because to be honest, what we're teaching, it's not very complicated, right? I know some of you don't come from a science background. Even I'm not from a science background. I mean, I'm not from a finance background. I'm from a science background, right? And yes, okay, I might have more experience, but what we are teaching you guys in class and how we have taught, I think it's understandable for you guys. You've understood the concepts.
Yes, ma'am.
Yes, ma'am.
Yeah, so I think it is easy enough for you to at least bare minimum score a 3 out of 5 in your mocks.
Yes, ma'am.
Yes,
Yeah.
ma'am.
I have very, very high expectations from you guys, right? I want the entire batch to get tiered, right? I've given you the tips. I've given you how I'll be scoring. I've told you to get a 3 out of 5, at least what you minimum have to give me in terms of answers. So that is the expectation from my side. Is this clear?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Okay.
Yes, ma'am.
Do we have any other questions that you want to get clarified?
Ma'am, one last question.
Hmm.
We will get the intimation about the mocks on the mail or on the LMS? Like when is
On
our
mail,
schedule?
mail. I'll send out a mail. So
Okay, ma'am.
anything related to your mocks, your domain mocks, I will always send out an email with the schedule and the slots and the link.
Okay, ma'am. Thank you.
Okay. Right. Any other questions?
No, ma'am.
Are we sure? Because we still have an hour and a half left. Yes, no, maybe, or do you guys want like 15 minutes to go through your notes and everything? 15, 20 minutes.
Ma'am, one question. Uh,
Yeah, go ahead.
Yeah. So you had told about, there'll be some general questions as well and all that. So something related to general knowledge and all that. Like, could you just tell us what?
General knowledge, matlab market news, Tanu, right? So, or
Something.
what? It can be financial news, right? So you can follow Economic Times or
Yeah.
this thing. Right now, what is the biggest news as of today is the reigning monarch of Britain is dead, right? So we shouldn't be laughing, sorry. God rest her soul in peace. But yeah, right. Other than that, there is so much market news, right? That is there. You can talk about why share prices are going up or down. You can talk about a company that maybe has come out now. What is the latest thing? Apple's coming up with 14 whatever Pro. God knows how many numbers they'll come up with. But that is what I'm talking in terms of this thing. Okay.
Yes, ma'am.
Okay, it won't be like general knowledge. I'll ask you who's the Prime Minister of UK right now. Who's the Prime Minister, by the way?
Oh,
Of UK?
you can answer.
Srinath immediately. Liz Truss. Yes. When was she appointed?
Yesterday.
On the 5th of
Not yesterday. On Monday.
Yes, ma'am.
Yeah. Who was her opponent?
Rishi Sunak.
Rishi Sunak,
And who is he?
Indian
He's a
origin.
Indian origin.
Indian.
son-in-law of
Son-in-law of who?
Narayan
Narayan
Murthy.
Murthy.
Narayan Murthy. Right. So at least some of you know some this thing. You need to, when I say don't be a frog in the well, right? Keep in touch with what is happening in the news, right? So download Economic Times or maybe Times of India or whatever it is, and have a brief read of what is happening in the markets. Yeah.
Ma'am, can we get the information about which company doing mergers and acquisition? I tried to search many things, but I could not get.
It usually won't go, you won't get the news unless it's made public.
Yes,
Right.
ma'am.
So maybe you can look up in Google recent companies that have merged or recent acquisitions or something like that.
Ma'am,
Because
that I get. Who has done what? I am not getting. Like which
maybe
Goldman Sachs or
Goldman Sachs has never merged with anyone ever.
no, ma'am. If for example, if Elon Musk is buying Twitter, who is doing that merging, whatever acquisition from which company?
Okay, then you researching, you have to be a little bit more good at it, right? Twitter shares, I don't know from where he bought it. I think he definitely executed it through some broker, or he might have done it himself also, no?
Yeah,
Or he-
ma'am. Actually, 2% are there in the bidding, like JP Morgan and Goldman Sachs. Both are in that. Further, I didn't get the information.
Probably because it's not happened yet, no?
It has not happened yet. Yeah, they are in
That's
the
why.
race to get
They're
the
in the,
deal.
yeah. So once that is done, then they'll announce how much was acquired, how much.
Okay, ma'am.
Okay. Right. Any other questions? Yes, no, maybe.
No, ma'am.
Are we sure?
Yes, ma'am.
100%?
Yes, ma'am.
Yes, ma'am.
Lock किया जाए?
Yes, ma'am.
Okay.
Yes, ma'am.
Right. So, okay then, if you guys are okay, we can wind up for today. Before we go though, Sneha Singh, can you drop your phone number and email ID please in the chat quickly?
Okay.
Sing your phone number and email ID. Just check. No, just yours as of now. Right. So if there's nothing else for today, no questions or doubts for today, I can figure, okay, if it's okay with you guys, we can wind up the session for today.
Yes, ma'am.
Okay, ma'am.
Yeah, so start studying. I will publish the mock schedule shortly or by evening today. It will be published. So you'll accordingly get your timing and slots and the link as well. Okay.
Okay, ma'am.
Okay, ma'am.
Okay, ma'am.
Right. Email as well, Sneha. Okay, rest of you can log off if you want to. Have a good
Ma'am?
weekend. Yes.
Ma'am, it would be on Monday and Tuesday, ma'am.
No, Tuesday, Wednesday, 13th,
Tuesday.
14th.
Okay, ma'am. Thanks.
Monday is my week off. I only get 1 week off. I work on Saturday,
Okay.
Sunday also.
Okay, ma'am. Sorry.
All right. Okay. All right. Then, if nothing else, good luck. Study well. We will meet up for mocks and do well in your mocks. Yeah.
Thank you, ma'am.
Okay, ma'am. Thank you.
Thank you, ma'am.
Thank you,
Thank
ma'am.
you. Bye.
Thank you, ma'am.